Bismillahirrahmanirrahim. This presentation is aimed at highlighting the difference between Islamic and conventional insurance through financial figures, profit calculation. Islamic insurance process, as you can see, there are participants, there is an Islamic insurance company, and there is an insurance fund or participation fund. So number 1 and 2, the customer enters into an insurance agreement by making payment of premium, which is a contribution in the insurance fund, and signs the standard contract designed by the insurance company. Number 3, the amount of fee is deducted by the insurance company for services to be rendered for the management of insurance operation. Number 4, amounts of insurance funds are invested by the insurance company in Sharia compliant securities. Number 5, return on investment as well as original amount of investment refunded to the insurance fund. Of course, after deduction for share in profit by Mudarib, which is insurance company. And 6 is payment of any claims arises out of insurance fund. The model is for general insurance and not for life insurance or family takaful. How Islamic insurance company make money? Because the basic design is that Islamic insurance is a mutual insurance. Islamic insurance is a mutual insurance, hence members are insurer as well as insured. Islamic insurance company is entrusted with the job of management of insurance operations as well as management of investment of funds collected in participation fund. Reward for insurance company consists of two sources. The first source is fee for managing insurance operations. A certain portion is deducted from the premium or contribution made by the members. Share as a mudarib in returns on investment of participation fund. The money which is collected in participation fund is invested by insurance company in Sharia compliant investments. Whatever actual profit emerges, a certain portion is kept by the insurance company and rest is deposited again in the participation fund. Consider this illustration to understand the difference in financial terms. 700 individuals, owners of cars, entered into an insurance agreement with an insurance company by making contributions of PKR 20,000 each for a compensation of actual loss incurred subject to a maximum of PKR 150,000 per person for a particular year. During the year, verified claims by diversified members amounting to PKR 6 million. Furthermore, the collected amount earned PKR 1.4 million as return on investments. Operating expenses of the company are 3 million. Assuming managing fee is 15% of contributions or premiums for an Islamic insurance company. Mudarib's share is 70% and returns on investments of insurance assets. So what is the amount of profit for a conventional insurance company and what is the amount of profit for an Islamic insurance company and what is participation fund balance under Islamic insurance framework? So we are going to solve this illustration. Starting from conventional insurance company, all money collected belongs to conventional insurance company after payment of claims. Premium collection 700 multiplied by 20,000, 14 million. Return on investment 1.4 million. Total revenue 15.4 million. Less verified claims 6 million. Surplus is 9.4 million. Less operating expenses 3 million. So profit before tax for conventional insurance company is 6.4 million. Now Islamic insurance. All money collected belongs to participation fund, not to the Islamic insurance company. Investment return on participation fund belongs to the fund, not to the Islamic insurance company. However, Islamic insurance company receives fee for insurance services, a certain portion from the premium, plus share in profit as mudarib for making the investment of the funds from participation fund. So the first source, management fee, 14 million is the contribution or premium multiplied by 15%, 2.1 million. Share in return on investments, 1.4 million is the return on investments. 70% belongs to mudarib, so 980,000. Total revenue of the Islamic insurance company is 3,080,000. Less operating expenses 3 million. Profit before tax is 80,000. So the conventional insurance company profit is much more than Islamic insurance company. I will talk about this point later. First, look at participation fund. Contribution 14 million. Return on investment 1.4 million. Total cash inflow is 15.4 million. Out of this, number one, you pay the verified claims, which is 6 million. Number two, you pay the management fee to Islamic insurance company, which is 2.1 million. You pay the mudarib's share in returns on investment, which is 980,000. So the closing balance of participation fund is 6,320,000. In this illustration, the profit of conventional insurance company is much higher than Islamic insurance company. And the reason is very simple. We have much more contributions or premiums as compared to the payment of compensation or losses. So let's flip the coin. Assuming claims are more than premium. For example, losses or claims are 16 million. The results would change significantly. In fact, if we do the same illustration again by assuming that losses are 16 million, loss of conventional insurance company would be 3.6 million. Deficit in participation fund would be 3,680,000. But profit of Islamic insurance company is still 80,000. So it works in both ways. If premiums are more than losses, conventional insurance company makes money, maybe sometime huge money. But if losses are more than premium, then conventional insurance company goes into loss, which is not the case with Islamic insurance company, because here company is not trading compensation for premium. Here insurance company is making money by providing services as well as by sharing the actual profit. Thanks a lot for watching. Your comments and questions are more than welcome. My email address is given. Assalamu alaikum wa rahmatullahi wa barakatuhu.